Downtrends are starting to break all across the market. This is the bullish reversal that I've been looking for. Today was a green day in AMC, and I'm excited to hop into the analysis, starting with my 15-minute chart on the price mirror that we had off the run to 34. You can see it now. Big push up, big dump down. And on either side of that mirror, we had what are called half-staff formations. This means that the price formed a flag pull, a consolidation pattern, and then pushed higher, a full move from the way up on the second half. And that happened on the way down too. First side was a pennant, the second side was a flag. This was very cool to watch in real time. Now I have a couple of downtrends drawn from the top at 34. The first is a true downtrend. That is to say, I followed Bulkowski's trendline rules, started at the top, went down to the low, and then raised that trend line until it did not overlap the price anywhere. And you can see that this little peak here from this little double top, that's where I defined that downtrend. And we have had a confirmed breakout of that downtrend. The price did move up, pushed higher, closed up here, and then came back down, tested that downtrend. We had some bullish divergence here, and the price has now pushed back higher. So this is beginning to look like a 1, 2, and a 3 wave move. I need a new high above this level. And this is somewhere around 14 something, 1444 probably. Let's see here, 14, or wow, this is too hard, I can't see it here. Goodness, 1422, yeah, 1422. Need to close above 1422 to really confirm this bullish breakout, and then I'm going to start looking for a price target based on this trend line, and that's going to be a sweet target. It really is. It's probably going to be similar to this ugly double bottom I see shaping, and I'm actually going to go through that today and formulate that price target. So here we go. Without further ado, let's zoom into what happened more recently over the last couple of days. We have seen a big push up and out away from that downtrend, and now the price has encountered this line. And what this line is a buy trend line. And I looked it up, and it's actually in Bulkowski's books. This guy right here. So these books are really good. I recommend that people buy them and such. This one has all the chart patterns in it. Not all of them, but a lot of them. The good ones at least. And on the triple bottom, Bulkowski says you can form a trend line from the peak of the incoming downtrend, and then don't overlap the price over the intermediate peaks of the triple bottom, and there'll be a buy trend line when the price pierces over that line. And that's what I've been doing with double bottoms, and it's been working, since double bottoms and triple bottoms are basically the same thing. Not quite, but it is horizontal support resistance defeating the downward pressure from a downtrend. So conceptually similar. So I've been applying that, and it's been pretty successful. And that's what this line is right here. You see the price did come up to that level, peak, and then fall. But along the way we formed, what's this? This is a pennant or a flag, one of the two. Depends on how you want to draw it. I thought about drawing it like a flag, and it looks really good. First I want to make my trend line parallel, and then bring it in, right? So let's have a look. What would that look like as a flag? It doesn't look as good as a flag. It's kind of loose, but it does work with a partial decline here and then a push higher. This looks really bullish to me. It really does. And so there is going to be an intermediate price target along the second run or rise off of this ugly double bottom. I don't know what that is. I think Obi-Wan calculated it in my Discord server today, and it was like 1423 or something like that. So pretty bullish still, pretty bullish. Now, if we can get a full extension and this becomes a half staff formation like the other two that I showed earlier, the price target is awesomely high. It's like above 1450. That's good. That's really good, especially if we can get that move tomorrow. If we have a similar move tomorrow as that we had yesterday, I'm going to be sitting really pretty. And I've actually purchased a bunch of options contracts, not a bunch, but I've increased my exposure in kind of a dumb way, but I mean, if what happens what I think is going to happen, it'll be just fine. It'll be okay. So this is the most bullish scenario right here, and the price closing above that trend line, this is a big deal for me, especially when I see these big tall tails. Like, that's nice. The volume today was really high. The RSI stayed really high. This is looking really good. Really good. I mean, so good. Oh my goodness. I'm trying to stay calm, but it's like, So here's my day trading chart. I'm going to move this over into the 1 minute time frame. We'll have a look at this a little closer. And something about high and tight flags, half staff formations. again here, yesterday we did have a flag pull, and right in the middle of this flag pull, we have a really clean double bottom, right? That did have a, not really a handle, I guess. You could call that a handle, and a handle describes a consolidation pattern that appears at the end of a pattern like a double bottom, and then the price broke up much, much higher, which is fantastic. What happened after that run is we had this little channel or this flag shape up, and we have this flag pull with a flag. And this was a half staff formation, and the price did continue to rise. You can see there's a moment here where the price comes down back into the pattern and then closes above, tests the level of horizontal support and resistance, and then moves higher. And I think that we're going to see something similar tomorrow, because we have a similar flag here, and here I have it just shown in downtrends and such. You can see that there was a big downtrend started from the intraday high, and that towards the end of the day, that broke, and the price went 1, 2, and 3, and closed above it, forming a new uptrend towards the end of the day, just barely, but it did so, which is nice. It's not truly an uptrend until we can get a high above today's intraday high, but I am pretty hopeful that we will see a continuation of this rally tomorrow. Now, here are the calls I bought and where I bought them. These are all very premature buys. That's pretty poor form on my part, and so I'm probably going to lose some money for that. I'm not too worried about it. When we were coming off of this downtrend, I did see another ABC 1, 2, 3 wave form up right here, and this kind of is the opposite of the ABC move I showed back here. Here we had a flag come down and A, B, and C push us up and out as the price bounced off of that uptrend. And here it's kind of the opposite. We had a downtrend break, right? And then the downtrend form off of the rejection of that. And I was just looking at this, and I was just thinking about 1, 2, 3 wave patterns. And there's one right there, 1, 2, 3. And inside of this third move, there's another 1, 2, 3. So this is what Elliott wave analysis is, and I'm getting the feeling I'm going to get an eye for it. I need to read up on it because it's just sticking out to me a lot. 1, 2, 3. And then this was kind of a rectangle, a horizontal move. Maybe this is like a flat base or an accumulation zone, and then poof, the price kind of jumps out of it somewhat enthusiastically. Not quite. Volume, though, was super high today. Super high today. I had a great time watching volume in the open. I was a little concerned that it dropped off a lot, but that is what happens inside of a flag. So we had a lot of volume push the price up, and then not so much volume carry the price back down. I am looking forward to this moving into bullish continuation tomorrow. If tomorrow's a red day, I'm going to get wrecked. And that's okay. That's part of the game. Now, I want to pull up the daily charts and talk about that for just a moment. Well, probably more than just a moment. I'm not going to make too much effort to try and make this a short video. I'm just going to give up on that. I need to get more analysis in here, and I just haven't been doing that much. So we do have these two valleys, and the second is higher than the first, and this creates an uptrend through here, but it's not quite an uptrend, not until we can set a high above the, well, let me explain. This downtrend, right, has been broken. It has not been broken. Wait, so you go from the high to the low and then don't overlap the price. This second bar is going to determine that downtrend. So we still haven't broken this downtrend, and right away you can see it. There's a pennant there, 1, 2, 3, 4, and today would have been a fifth touch. So it's important to acknowledge this, that this could just be a consolidation pattern. That's true. It's possible. We came down a whole bunch, and now we find ourselves in a pennant. Maybe it's a triangle. It needs to be 3 weeks long. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Okay. So this is actually a symmetrical triangle. It's a symmetrical triangle, and I'm going to analyze it like that. So the double bottom, the ugly double bottom is still premature. We need to get above this intermediate high before we can say, hey, we have a confirmed ugly double bottom. So for the time being, I'm going to analyze this as a symmetrical triangle, and I'm going to assume a bullish breakout. If the price does break down, that's going to be ugly, but I'm not feeling like that's going to be the case, so I'm going to invest my time in the bullish scenario. I'm just going to type in symmetrical triangle on Bulkowski's website, thepatternsight.com. Symmetrical triangle. Here we go. So what do we got, Bulkowski? What do we got? He says the overall performance rank, where 1 is the best for up and down breakouts. I'm going to look at the upward breakout stat. He says, let's see here, 36. 36 out of 39 for upward breakouts. So the symmetrical triangle is a poor performer. And, so is the island top. And the island top didn't reach its target. So, yeah, I don't know. Gotta have to take that with a grain of salt, I suppose. For an upward breakout, we're going to use a 58% percentage mean price target. So we're going to take that and apply it to the height. I'm going to go through these ID guidelines really quick. He says that the price trend can be any direction leading to it. It's a triangle. There are two trend lines. The crossing. Price must cross from the pattern from side to side. Yep, that looks good. Touches at least 3 times. We have that. He says the volume trends downward 84 to 86% of the time. And that's true, I guess. Yeah, since we had this big spike early in the pattern and now the spike's getting less, perhaps we'll see a big volume spike push us out, hopefully towards the upside. He says the breakout likelihood is upwards 60% of the time and 74% of the way to the triangle apex. And so I actually have a Fibonacci tool I use. It's not so much a Fibonacci tool because it's just going to give me a percentage. And I had to define where that apex is. And there's also some information on Bulkowski's website about how trend reversals are prone to occur at the apexes of triangles. So it's important to know where that is in time. So if this does turn into a spectacular rally and we see some massive push higher, I would expect that to end what day is this? On the 10th. This is June 10th. So it would be likely to end around that time if we were to see a big move based on that principle. So at 74% of the time, we're going to look for an upward breakout of this pattern. It will be June 1st. So that would imply that we're going to hang out and consolidate in here above this pink zone for a couple of days. And I'm going to keep that in mind because if that is true, then I need to sell my calls because I don't want to lose, all that much money. My hair is bothering me. I'm thinking about just always like teasing it out into like a big mess. I don't know. It looks kind of good when it's all teased out, but okay. So let me get to the price target here. We had a high at the beginning of the pattern. We're going to call that 1591. Let me pull up my calculator here. 1591. And we're going to subtract the low of the pattern, which is down here at 970. I already know that's 970 minus 9.7 equals that. We're going to multiply that by the percentage being price target, which I think was 58%, was it not? For an upward breakout, it was 58% by 0.58. All right, and now comes the tricky part. We need to guess what the breakout price is going to be. So what would the breakout price be? It's going to be changing every single day because of this downtrend, right? So let's just use tomorrow and say, hey, if it breaks out tomorrow at 1275, why not? That's arbitrary. And remember, that's going to be a moving target for a couple of days until it happens. Plus 1275. What do I get? 1635. That is pretty sweet. And this is a clean pattern, so it is going on the board. I need to get a good color for this one. I think it's time for maybe something blue. Does that look good? I like that. And I'm actually going to just delete this line instead of trying to pick the same box. It's so hard to pick the same color twice off that menu. So I just duplicate it and pull it down. And that's a great way to make sure that your apex is very tight and clean. Little trick there without having to use magnets. And now I want to get a price target going. So let me just select that tool, put it up here, and make it the same color, of course. Now it's like, which color of blue was it? I don't know. That one? No, that wasn't right. Ugh. This one maybe. Okay, and the target was in the 16s, which actually is awesome. 1635. Is that right? That's amazing. It's because it's a tall pattern. Pretty tall pattern. 1635. I'll have to double check that later. But there you go. Okay, so if we can reach that target, and I'm thinking that we might just break out sooner than the 74% mark. We might get an early breakout, which would be nice. That would confirm our ugly double bottom because the price would rise above that intermediate level at 1422. So I'm going to go ahead and look at the double bottom anyway, just because if it does occur, it'd be nice to know what the target is, because the price could reach that level in a hurry. And I'm going to show this double bottom by just dropping some arrows down. I don't like drawing W's on my chart. And I'll use a similar color actually. And duplicates. And I'm gonna gray out this descending triangle target just because I need the color. All right, and let's talk about ugly double bottoms. I think that I already have the page open here. Let me just click out of that. Is this ugly double bottom page? It's not. So here we go, searching ugly double bottoms. Ugly double bottom. Okay, here it is. Think of an ugly double bottom as a double bottom in which the second bottom is significantly higher than the first. Ugly double bottoms can help you time the entry when bottom fishing. The average rise is exactly the same as for all double bottoms, 33.7, when compared to 1,452 double bottoms between 1991 and 2004. So, hey, he's got a good sample set for his study here. The failure rate is worse, 8% for ugly double bottoms versus 5% for all double bottoms. The following statistics are based on a study of 562 patterns found in 100 stocks from 1991 to July 1996, and this is a pattern that Bulkowski quote unquote discovered, more like observed, defined, and then did the research on. And it doesn't quite look like a bottom, like a double bottom, because one of those peaks is going to, one of those values will be higher than the other. And it works just like all of their double bottoms. You're going to take the incoming price trend and you're going to take a percentage mean price target and add it to the intermediate peak, right? He says that the price trend's downward leading to the pattern. Obviously, it looks like a double bottom with unequal bottoms. The second bottom should be at least 5% higher than the first, and it is, because I think I figured it out that this low needs to be above 1018, and it is. Volume recedes 81% of the time, and if we're looking at the volume at the bottoms, it is lower on the second half than the first half. Breakout. Upward when price rises above the highest high between the two bottoms. So that would be here, the 1422 level I was talking about. He says the pattern confirms as valid once or when price closes above the peak between two bottoms. If price does not close above the confirmation price, then it's not an ugly double bottom. So we're not there yet. So this is going to be a little bit of hopium charting because it's not a confirmed pattern, but that's okay because it is shaping up, and we do have a good probability that this symmetrical triangle will play out into a bottom, an ugly double bottom. And that's a good pattern sequence from triangle to ugly double bottom. Very good sequence there. Bulkowski's webpage provides a lot of different things, including trading tips, and he's probably going to say you shouldn't trade until you get above that intermediate peak, and I'm already invested, so yeah. He says patterns of the breakouts within a third of the yearly low tend to underperform, which isn't great because we are near that lower third, right? Let's go back up here and read the measure rule. He says compute the height from the highest peak, point C, to the measure rule figured out to the right, to the left bottom A. Then multiply by the percentage mean price target, add the difference to the breakout price, the price of the highest height between the 2 points to get C. Pretty easy if you ask me. So that's going to be the same height we measured for the symmetrical triangle. You're starting to catch my drift here when I talk about pattern sequencing, because they're going to have similar targets, similar things. It's almost like we're really just doing trend line studies all the time. So with a high of 1591, here we go again, right? 1591 minus 970 gives us $6.21. And our percentage mean price target here is going to be different than the triangle. It's 76%. That's higher than the triangle's target, or percentage mean price target. So this is a more bullish pattern. I'm going to multiply that by 0.76. And something else too to consider is that this pattern has its percentage mean price target added to the high here, not the breakout price. So we get more of the overall height of the pattern, and the breakout price is higher too. So this is going to be a much more bullish result. And this was 1422 plus 1422. What do I get? 1893. That sounds good. That's what Obi-Wan was saying today in the Discord. I wanted to do it on my vlog though. It is really nice though when other people are doing the analysis in the chat. That's so great. Like, I love it. It's fantastic. It's so nice not have to try to figure everything out all by myself all the time. So 1893. Put that on the board. Yes, that looks good. If we can get a symmetrical triangle breakout to the upside, I'm going to color this line too. And I'm going to say that this is probably going to be my forecast. I'm still looking for, I know this is crazy. I'm always like, we need one more green day, but we always do need one more green day. What is nice is that we did break a downtrend from this peak. All right, today you can see that the price did close above there. So that's a really good sign that the price is starting to go somewhere. But you can see that there was a pretty tall wick, But remember, this is a flag. This is a flagpole in a consolidation pattern, and the volume here is really good. Implied volatility is rising still. It's correlated with the price positively, and the RSI looks like it wants to start moving up higher too. It's slowing down a little bit, so hopefully tomorrow we can get a nice knock out of the park, home run hit. I don't know, just a good run up and out. I'm going to keep charting what I expect to happen. If we can get that breakout to the upside, I definitely can see the price pulling back a little bit to other significant levels of support and resistance at around 1450 before pushing up higher. And this is why I'm always charting those 1, 2, 3 moves, is because basically that's how the price tends to move in single directions. It tends to go up, pull back, and push up, or down, up, down. Those 1, 2, 3 moves, they're great. If you can think of the price in that way, here's 1, 2, and then 3. It's very common, and a lot of these patterns are just analyzing essentially where the price stopped along the way and at what point along the run, like compared to its height, did the consolidation pattern happen, and all that stuff. It's all just relative movements. So this is a very strong thing to do. It's just put the 1, 2, 3 down and see how it plays out, because typically the price runs till it hits horizontal support and resistance, and then it turns around, and then it tests, and if it breaks, you get a bearish pattern, and if it pops up higher, you get a bullish pattern. So this is what I'm thinking. This looks really good, and if we can get all of those things going, what pattern would show up next? Well, it would look something like an inverted head and shoulders, wouldn't it? Except this shoulder isn't very well defined. So I wouldn't be calling it that myself. Instead, I'd rather be looking for probably an ascending broadening wedge, perhaps. I don't know. We're going to have to get there. That's way too far out in the future. But for now, I can see the symmetrical triangle. I'm looking for an upward breakout tomorrow, hopefully. And with any luck, that run will also confirm the ugly double bottom, and that ugly double bottom target is up towards 18, and this would be a spectacular beginning to this big bullish run that I'm hoping to see. And this is what I'm positioned for currently in my trades. If this doesn't happen, it's going to hurt. I think I covered all the bases here on AMC. Let's have a look at GME too. GME did big stuff. Similar to AMC, huge wick, right? And I haven't actually, this white line is VWAP, by the way. I don't usually have that on because I don't like how it clutters my charts, but today, decided to have it. Yeah, that's a huge wick. Huge volume too. RSI is coming out high, pushing above 50 and breaking through a downtrend. See, GameStop looks more bullish than AMC right now. It almost always does when it happens to be the case. And this looks pretty good too. This is a similar consolidation pattern. It is somewhat interesting to see the price get trapped below VWAP like that, to push above it, form this little price mountain, and then choppy. In fact, it's almost more of just a chop zone, more a rectangle than consolidation. But if that is accumulation, that's what it's going to look like. Applied volatility did drop quite a bit during that time, so I'm going to call that a rectangle. Ouch. That's okay though. I'm sure that plenty of people made tons of money here, and I'm seeing what I think is a nice half staff formation. Yesterday's run appears to have formed a pennant which has the semblance of an ascending triangle. I'm gonna draw a flagpole there and say, hey, if that was a half staff formation, then I should get a full rise out of that breakout. And did I? Yes, we did. We absolutely did. And then the price topped above there, which makes sense, and came down. And this looks very technical, very clean. GameStop, amazing stuff. But how about the index funds, though? What did the index funds do? I haven't looked at the 1-minute charts on the index funds. Woo! That's interesting. Look at the arc of that thing. Okay, so, wow. That's really curious. I did see a pennant here. We did have an upward breakout, and you can very clearly see this, right? I mean, how many times do I have to say it? 1, 2, and 3. There it is. And the price kept rising, and another little 1, 2, and 3. So I'm not sure if we reached a significant level of support and resistance here on this time frame. I'm going to go ahead and zoom out a little bit. And I'm on a pretty big time frame, so I'm going to want to delete these lines before they clutter up my next view when I zoom out to the daily charts. Ka-cha! There we go. Pull this over. We're in this descending broadening wedge, of course. Oh yeah. Oh yeah, that is what a breakout of a downtrend looks like. The price fell, it bounced, it fell again, bounced at a higher low, and then continued to push out above the downtrend with a significant push higher, only a small wick on this green candle. I wish that volume was a little higher though, to be honest. The RSI is looking good though. Implied volatility is dropping, and that's not bad because the price is now retracing higher. You can see that there is a sweet double bottom coming in here, but again, we're gonna need to get a close above this high at 408.57 before we can say that's a confirmed pattern to put the price target on the board. But I am very optimistic. This does look like a breakout of a downtrend very cleanly, and I think I already did this, but you know, a trend line mirror price target out here would put us back up to like 435 or something like that. 428. Yeah, this is good. This is looking really good. Not much to comment here. That is the continuation though that I was hoping to see, and that makes me excited to look at IWM, which I haven't looked at today either. Also, similarly, even leaving a gap behind, that's okay between the close and the open. There is some wick action through here and a little tail. The volume was kind of low. That's okay. This is, again, a breakout of a downtrend, and I'm really happy with this because this close, is it above this level? This high of 182.84 with the close of 182.72, 82.84, so almost. So a green day tomorrow for IWM is going to confirm an ugly double bottom, and that's exciting because that's the same pattern I'm looking for in AMC, and maybe AMC catches up to IWM and also closes above its intermediate high at 14.22. The price closing today somewhere just above $12, I thought it was, so that would be another $2 or $3 run tomorrow. And I think that the flagpole we have would support that. I think that the technicals do support a rally like that. So that'd be cool. I covered AMC, GME, IWM, SPY, and I think that's all I want to do. Video's already at 26 minutes, which is plenty long, and I didn't even cover really everything I wanted to. But here we go. I wanted to drop some analysis in this one since yesterday's video was just like me being like all excited and stuff. If you want to see me chart live, join the Discord. There's going to be a link in the video description. And that's all I have for today. Happy trading.